Hey everyone, how's it going? Thought I'd make another video on how I apply this data and show you some more real world examples. So let's go to a chart, and this is a daily chart on a 30-minute interval. And what we have on last Friday, Apple was being held down from the options pressure at that 595 level. And so what happens on a Monday is the exact opposite takes effect, is that options cap is lifted and it helps bring Apple up. And so once again, we have Monday, Tuesday rise, Thursday, Friday fall. And you won't see this trend happen 100% of the time. It won't happen all 52 weeks out of the year, especially if Apple's in a correction or a downtrend. You'll see the inverse happen. It'll actually come down. It'll just be the inverse of this. So it's not 100% of the time. Majority of the time it is, though. This week is a good time to go over. A lot of people get confused on, what if like say this week, the call strikes are changing so rapidly. How do you play this system? Well, what I do is, number one, you don't have to play every single week the same. Every single week is unique. So, as a general rule, just a generic example here, say you want to use this data late in the week as possible. So, Friday at 4 o'clock is the perfect time to use these strikes. Well, that's a little too late for trading. There's no more premium. The market's closed. So we got to back it up to Thursday. Do I want to use this? Well, there might not be enough premium for what you're looking at doing. So Wednesday, yeah, that's a good happy medium in there. Tuesday, something like that. So you got to play around with what you're trying to do. Generic, say on a Monday, Apple opens up at 610 right here, and the spread is $10 wide. So if I don't really do a lot of things on Monday, but if Apple happened to come make this $10 trek, yeah, sure, I'm going to go ahead and use this as a buy signal. And then more than likely Apple will come back this way. I'll start shedding some. Or say Apple opens up at 610 and heads this way. I'll go ahead and sell some, buy puts, do something like that, and Apple will head that way. So let's go to what really happened, though, real world examples. Apple opens up at 595, and like I said, every week is different. So Sunday night, what do we have going on this week? We have end of the quarter buying coming in. And so the stock market should be lifting because of this. And then the last day of the quarter, you probably going to see some selling. And so if I know that, there's no way this week, if Apple opens up 595, I'm not going to be using this as a sell point. It's just too early in the week. I want to see more trading. I want to see more calls build up, etc. If Apple does come up to this 600 and gets knocked down, no big deal. I'm going to know it for myself, but I'm not going to make a trade off of it. I'm just going to, it'll ease my mind of knowing why Apple cannot budge from 600. In this case, Apple, broke through that 600. That's completely fine. I'm not doing anything about it. It shows me Apple has a lot of strength. And what you can do on Sunday night, I had the 98% open, or the 98% range here on this 630 strike. Because what will happen is if this doesn't hold, this 610 will become your new highest open interest. If that doesn't hold, this 620 will become your new one. If that doesn't hold, this 630 will become it. But eventually, this just will cause too much selling. It'll be too much of a weight for Apple to take. If you had, say, all three of these up at 10, well, let's go to, here's what Tuesday looked like. And that same exact thing happened. So it broke through this, and this built, it broke through that, and then this built. What happens is you can only go so far in the week before, this is 30,000 calls combined right there, where it just starts to become too much for Apple to take. And on Tuesday at the close, Apple was up here at 615. So here's what I did. Here's where I finally started to use this data. Using what I just said, it can only go like, if this starts to build up too, and this becomes 40, 50,000, no, that's just going to be extremely hard for Apple to stay up in this range. So what I did when Apple Tuesday closed, going with that same, Monday, Tuesday uptrend, Thursday, Friday down, I sold the 630 credit call spread for 40 cents, playing that, this will start to cause buying, or selling, I mean. So let's go into Wednesday. Um, this 615 became your highest open interest, and that wasn't holding. Um, so you just know Apple has a lot of strength. But at one point, here's for Thursday's trading. At one point, this is going to become just too much. And I made a comment on my site on Wednesday night that on Tuesday I was, or yeah, it was on Wednesday night that I said, I think the buck stops here basically with the call strike because there's just going to be a point where it's too much pressure on Apple. And this is when you could come in here and say, okay, now I'm going to use this as a sell signal. Enough time has went by. It's Wednesday. That's 17,000 contracts just on this one strike. That's you're talking almost monthly status as far as the open interest goes. It's going to be high probability. It's going to be coming down this way, and and that was it. And then we all know what happened. This is just kind of a visual how I give. The stock started tumbling, and mixed with the last day quarter end selling, it came down and closed 45 cents under this 600 strike. Let's zoom in on that Friday. I think obviously you saw that the 600 puts strike had something. They had an influence here. Um, Apple, bounced from way down here, but it was playing with the 600 level the whole time. Obviously, there was buying pressure coming in there. On a $600 stock, I'm not real concerned that it couldn't hold it exactly, that it expired 45 cents under it. Big deal. And plus another thing, I think if this was any other week besides quarter end, I think it would have held that 600. You had 26 million shares come in, so I think it's too much selling for Apple to hold that. And so again, I'm not real concerned that it didn't hold. Normally, if it was another week, if this was a regular week, and say Apple closed at 598 or something, I'd be a little worried because, and say there was 12 million shares or something, I'd be worried because that should be able to hold it. Considering quarter end, not too alarmed. And I think going into next week, you should still see the same trend. I think, the first day might be a little not so truthful because you probably will have buying coming in for the start of a quarter. But I think this trend should continue, and we'll watch it and go from there. What I did, the other play that I did is, I guess we'll just use this, is remember those trading shares I was talking about where I sold the 605 covered calls and I didn't mind if they get called away? I took in $8. Well, this week I want to raise some cash, so I want to get rid of those. Let's go to here. So on Tuesday, what I did, because I wanted to get a high dollar value going with that Monday, Tuesday up, and I want to get rid of these shares. And how I sell shares is I don't go to the open market and sell them. I sell calls because if you're going to be taking my shares, you are going to be paying me a premium. I'm not going to take market value. So I sold these 600 calls when Apple was 614 on Tuesday up here. I sold these, wanting them, thinking that Apple will be above 600, and I sold them for $15. So I have a net selling Apple at 615. I'm taking in $1 premium over what the market was trading at that time. What ended up happening is Apple closed under. I still have those shares. I could have sold in the after hours, but I took in, so just combined these last 2 weeks, $23 I've taken in, and I still hold these shares. So if I would have sold those positions, sold them at 600 bucks after hours, my net selling of Apple would have been 623. So you can see how if you have some shares out there, there's no reason to not take in this premium. That just happened to be kind of dumb luck because I expected Apple could have closed 630, and I was completely fine with getting rid of my shares at 615. I wanted to get rid of them. So that was another play that I did this week. Okay. Oh, and one more thing here too is the reason. Not every time you're going to be playing both sides, and like I said last video, a lot of times I'm only playing one. And so why I sold the 630 call spread is because Apple was up at, in this area on this call side. And so that's going to be your sell signal, or you want to put on a bearish trade. And so I made that bearish trade up here. Apple just was never around this put side at all. It just opened up in the week and went just this direction. So I played up in this area. There just wasn't enough premium. Plus, I had just, it depends on your whole trading account, what you're doing. I just didn't have enough funds, or I didn't want to do anything with this put side. Didn't get a chance to. Fine by me. So if Apple was playing down here, if it was down here, I'll put side and not the call side because it's too far away. So this is overall your sell signal or bearish area, and this is the opposite.